Everyone joining? Good morning, everyone. My name is Tiffany Yen Louie. I'm with World Trade Center Utah, Chief Marketing Officer here. Welcome to another Friday morning briefing with us. Thanks for everyone who's here to join us. It's been a big week, another big week actually, but have some great speakers today to join us. Troy Keller, who many of you guys may be familiar with if you've joined previous weeks and been following us last many months, but Troy is partner at Dorsey and Whitney. He's here to provide some updates on our tariff dashboard that continues to be updated in real time. We'll then have a chance to hear from Jared Anderson with World Trade Center Utah. He oversees our business advisory team, and over the past many months, he and his team have been working hand in hand with a lot of great businesses throughout the state, various sizes of businesses, and he'll have a chance to be able to share us with a little bit about some of the work that they've been doing to give a sense for how we can help in some ways. So I'm going to turn it over to Troy.
Great. Thanks, Tiffany. And Jared, great to be on with you today and everyone else. As Tiffany mentioned, it has been another whirlwind week. I mean, we saw a lot of this coming. We've known for several months and since April 2nd that we would be seeing the reciprocal tariffs after that pause was ending this week. I think there was a little speculation things might be pushed off again, but not much. It was after the deal making that happened with some countries. It was expected that those would come into play, and they have now, and we'll provide a little more detail on that. I wanted to just back up for a second because provide maybe a little more perspective, at least how we're seeing it. As each week goes by, we get more perspective, and as we've said on this webinar a bunch of times, the biggest challenge that businesses have is the uncertainty, and there's still plenty of uncertainty, and we're going to chat about that a little bit. But I will say, I mean, for what it's worth, and it's not worth a lot, it's painful, but for what it's worth, some uncertainty has gone away in the sense that we know that tariffs are here to stay. And I think early in this year, we wondered, well, is this just leverage for deal making? And once the deals are made, will the tariffs go away? As we've seen that even when deals are made, pretty significant tariffs still remain in place. And so instead, where we see companies and industries kind of pivoting to is saying, okay, we know tariffs are here to stay. We don't know what the level will be in any particular area. So we're remaining flexible. We're doing things to remain flexible and to do what we can to take it as it comes. So now we talk about fluidity. Another thing that we know that's pivoted a little bit since where we thought things might be. I think there was an expectation or a potential view that we would decouple from China in a significant way, and that very well may still be the case. Maybe that's still the more likely scenario, but we've also seen with those discussions not going terrible. Are they going good? It's a little unclear, but they're not going badly. And you could see a situation where the discussions with China lead to some type of new arrangement and a new pathway forward that is, again, we'll see what it is, but I don't know that it's a fixed decoupling like I think we certainly expected earlier in this year. And on China, while we're touching on that, there is uncertainty whether that pause, because they were on a little bit different track. You'll remember that we had the tariff schedule for the reciprocal tariffs that pause was set to expire a couple of days ago, which it did. And then with China, it was on a little bit different track following a summit. And so now we're looking at August 12th as the date when those higher tariffs with China would come into play. And that date is coming soon, but there's been a fair amount of expectation that there'll be another pause as discussions continue, since the last round of discussions in Stockholm, again, didn't go badly. Did they go good? Again, unclear. Another thing on the perspective front, we talked certainly in many of these webinars about what products will receive exemptions and will there be an exemption process, or or will there be comment periods and opportunity to weigh in? And there's certainly some of that. The 232 tariffs, that's part of that. There's an embedded comment process. But what's different this time around is that for as opposed to companies or industries saying, okay, here's a request for an exemption, and here are all the reasons why we think that makes sense under the rulemaking, whether it's 232 or 301. With IEPA, that's not formally the process, and in fact, we've seen a different kind of approach, and the approach is very much current White House style, a deal-making type of approach. So we are seeing not just other countries working out deals with the USTR and the White House, but we're seeing companies and industries doing that. And so we've seen that with some of the major investments announced by like companies like Apple, and as a result, being told at least that they would receive effectively an exemption. Their imports wouldn't be tariffed because of the investments they're going to make in the U.S. Which raises the question if there's a pathway. There aren't too many companies in Utah that are the size of Apple, but we have some significant industries, and if they come together. So there are, I think that is what has become clear in recent weeks and months, that is kind of the path forward, that we'll see this almost organic flow of tariffs as deals are made and as variables on the ground shift and move. So here's some specifics on that. We talked about the reciprocal tariffs having come into play just a couple of days ago. The exceptions, like China, that is on its own track. Brazil, another kind of case study in another way to try to do deal making with the U.S. They've been a little more recalcitrant, and so the threats that are on an escalated track in terms of tariffs with Brazil. Switzerland similarly came and met with White House and USTR. Those discussions seem to have broken down to some extent. So they have kind of a threatened 39% tariff, so much higher than what they otherwise would have been. And will that get sorted out? We don't know, but dialogue ongoing. India, I think people have seen in the news, it already had the 25% global global reciprocal tariff that is in play now. But they've also been threatened with or announced that they would receive another 25% tariff because of their importing of Russian oil. That one wouldn't be effective until August 27th, meaning that they have some time to perhaps sort that out. We'll see. There are several exemptions on some of the products that come out of India, so it's not universal, but it's close to universal. Brazil, we mentioned, it's their base rate would be the 10%, but they've got this 40% imposed because of some of the actions they've taken. A couple of other processes we referred to, these are the sectoral tariffs. So we've got semiconductors and pharmaceuticals, and those are both continue as they've been in the last couple of months. They are continuing through this kind of regulatory process where there's opportunity for comments to be made. That closed quite a while ago, and now USTR is doing a review based on the feedback they've gotten back, and then we'll have kind of a formal announcement here later in the fall. But in the meanwhile, it hasn't stopped the White House, of course, from suggesting what the tariffs would be. They've said 100% on semiconductors, and on pharmaceuticals as high as 250%. Again, those are the places where we see major companies and industry partnerships committing to make investments in the U.S. and receiving kind of rifle shot exemptions on their end. A couple of the 232 things, there was a public comment process on unmanned aircraft systems, and that recently closed. Let's see, there's another one that recently closed. I think that is, that probably catches us up for this week, and we'll get questions. Be glad to talk about those. But again, I just wanted to, emphasize the fluidity going forward. Just because we've now hit August 7th and we see where those rates are, there's no reason those will stay. Discussions are ongoing. The reason, and you'll remember that some of the announcements early on were that we would, with during that time frame between April 2nd and August 7th, that would give the White House and USTR time to cut deals. And they did cut several deals, maybe 4 or 5. But as it was announced, it's just too, they just don't have the bandwidth to do cut deals with all the countries. And so that has been a limiting factor. And I think we'll get there over time, and that's why the fluidity is something that will continue on, and we just need to be aware of that. So with that, I will pause and hand things over to Jared.
Good morning. Troy, thank you. It's a pleasure to share this webinar with you this morning. I appreciate all the work that you do. You're a great partner for the World Trade Center Utah, and I really enjoy listening to you talk. You're so insightful on some of this stuff, so thank you. My name is Jared Anderson. I've been with the World Trade Center Utah for about 18 months, or about a year and a half. I lead a team of analysts that do phenomenal work for Utah businesses, whether it's business expansion or supply chain optimization. We have a team here that's ready and willing to support Utah businesses. My objective here today is to share with you a quick case study or an experience, a project that we've been working on for one of Utah's great businesses. They are a manufacturer of and a brand of gauze and gels and items that you might find in a first aid kit. They have a phenomenal business, and are nearly 100% of their products are sourced and manufactured in China. They had been advised for a number of years that maybe getting out of China might be a good idea, but it wasn't that simple for them to make that move. Their CM their contract manufacturer, was more than just a manufacturer. They were a true business partner for them. They provided financial support through extended terms. They provided a warehousing that was beyond kind of norms. When they needed help sourcing a new product, he was there to support them, or that this company was there to support them. And so making that move seemed unrealistic or challenging for them. That did change, however, in April, when we had Liberation Day, and many of you on this call experienced this. We saw cost uncertainty and pressure on profits. We saw significant supply chain disruptions, and probably worst of all, we saw planning challenges. It wasn't clear what was going to look like back then. What that meant for this company that we were working with, this is when they reached out to us. We'd been talking with them for previous to this, but this is when they said, we really need some help. What that meant for them is their landed cost increased by 145%. They were forced to freeze all their shipments and leave them in their warehouse in China, and they didn't have any guidance. They didn't know what to do, what the future was going to hold. And if I don't want to sound stark, but maybe some of you felt this way, but they didn't know if they were going to survive through the rest of the year. They didn't have, if things didn't change. Super grateful that they reached out to us. And I'm going to pause just real quick. I had the analysts that are on this call, and as I go through this presentation, they're listening. And if you have questions, specific questions about what I'm saying, feel free to do that. They'll respond to some of the questions that you might have. We turned it over to these analysts, and excuse me. So what do we need to do to find success? Here are some of the things, their primary objectives. One is they needed to look at the tariffs and find locations where that they might be able to significantly reduce or eliminate the tariffs. That would help them kind of focus on profit margin, and could they And I remember in a call last week, don't let this chaos kind of turn it into an opportunity for you. And so, does this, how can we can improve, meet or improve our existing margins? And then they had some kind of secondary objectives. They were concerned that if they were to move factories and to leave their current partner, that would they be able to find somebody that can meet the quality standards that they had set upon themselves. And then the kind of the second secondary objective was, where would make sense based on expansion criteria and other things like that that might help them with long term. So these were the kind of the objectives that they came to us with. And so what do we do? They wanted to maintain, if they possible, maintain their relationship with China, but they wanted to reduce their things. Our analysts looked into it. They studied the USMCA agreement between Utah, Mexico, and Canada, and in short, found that they could continue to maintain no more than 50% of their goods manufactured in China, so they can keep their partner there to a certain extent. They could take 50%, a minimum of 50% of their manufacturing in Mexico, and then through some clauses in the Canadian or the USMCA agreement, could ship that or move that product to the U.S. with a 0% tariff. Was the analysis that we were able to figure out. So what's been the next steps? How do we execute that? We helped this company develop an RFP. They had one partner and had never done an RFP before, and need a little bit of help developing an RFP. So we were able to help them do that. We provided some guidance on how to vet, new manufacturers. And maybe one of the most important things that we did is help them locate FDI connection points. These are working with the Mexico commercial service, the Mexico Consul General that's here, U.S. Commercial Services, and even found associations, FDI associations, that could help them distribute their RFP to potential companies. And an additional thing that we did, we took a group of Utah businesses, including this one, to Mexico and met with many factories, cluster presidents, associations, stuff like that, to help them with their vetting process and site selection process. We are not at the finish line. We have not punched this thing in, but we're super excited about where we're at with as far as the execution and the opportunities that this company has, and finding new partners in Mexico. And I'll just say, in addition to this one, and maybe more specifically to this trip that we went on, so switching gears to some other companies we help with, we have helped. In this picture, there's two other companies that came on this trip that have opened 4 different manufacturing contract manufacturing partnerships, with an additional 5th one on its way. Plus, another company signed an MOU with one of the associates to help drive awareness and manufacture opportunities for the Mexican companies. So, a lot of good comes from these business trips, and we're really excited for the project that we've done here. We feel like it's going to help them, and I think more importantly, they feel like it's going to be the right solution for them to move forward. Just a little bit about World Trade Center's mandate is to help all Utah businesses. Just quickly, some of our 2004 impact. You can see there the number of companies that we've helped, the services that we've provided, and this is across the whole organization. This isn't just my team on the business advisory side, but more specifically, what does my team do? We help with supply chain optimization. You need the logistics and shipping support, we can help you with that. You need sourcing and supply chain optimization, like the example we just laid out, we can do that. We can help you find sourcing partners globally. And I can say, prior to 2025, I would say 10% of our time, maybe 20% of our time was focused on, that supply chain optimization sideline. 80% of our time was spent on the market expansion, which is, helping people doing market research and selection, providing guidance as we enter into a market. We even have an investment team that will help you find investment opportunities. So, but since all this tariff, we're probably flipped, and 80% of our work is now supply chain optimization, and 20% is kind of market expansion. So, if you have questions, want help on some projects, feel free to reach out to us and see what we can do to help you. Tiffany, I'm going to turn it back to you.
Thank you so much, Jared. Really appreciate running through that. Troy, I have one, we're gonna have you do one more addition. He and I have been messaging on the side about one more thing that we'd like to share with businesses.
Yeah, you bet. So yeah, Tiffany had asked the question on the in-transit situation. And so if you have cargo that is on board and shipped before, sorry, not is in process, so to speak. So you've got it on the ship. That even if it lands here, takes a few days, takes a week or a couple of months. If it was on the ship before that August 6th, or sorry, 7th,
Yep, six.
six, yeah, before the
By
August 6th, yeah, reciprocal came back in, then those will be subject to that, in all likelihood, that 10% base rate that most all the countries had during that pause period. So no, that's a great thing to factor in. There is, we're not going to have surprise, increases on our tariffs for stuff that's been in transit here for a little bit. So I think that's a great point. Hey, I've got a
Thank you,
quick
Jared.
question for Jared. Uh, uh, Jared, that process, that sounded like something that, to move a supply chain to Mexico feels like something that would be multiple years, but it sounds like you did it for a manufacturing company here in Utah in just a few months. Is that right? Is
That
that
is
the
correct. So we
process?
began this process back in April, and we're not there yet. We're not, but we're not 100% through this process, but we anticipate before the end of the year that this will happen. So, 6 to 8 months is a possibility.
And USCMCA will be, in place at least through next year, and it'll be in place longer than that. It's been such a valuable trade relationship that we've had for so long here in North America. And while it's up for review, I think that is, especially how well things have been going with Mexico, I think that is a pretty a pretty strong opportunity and option for companies.
And I appreciate that. And I would say that maybe even more importantly, one of the biggest outcomes is giving the company confidence that they could do this. They didn't need this supplier, to help them, that they could go out and source and find opportunities for themselves. And I think so probably the biggest outcome of this is giving them confidence, know that they can do it without their partner. So
That's great. Well, I think it's a great case study in ways that companies can be proactive. One thing that there was early in the spring, everything seemed frozen. Companies didn't know what to do, and like we talked about, there still remains significant uncertainty in at least in the terms of fluidity. Things are moving, and I think now's, you got it. Companies have to pull the trigger at some point, right? I think now, the last couple of months and going forward, now is a good time, I think, to start thinking hard about making those bets.
Thanks so much, Troy. Jared, this was really helpful today and great to have you guys both with us. And I mean, I've been with the organization for about 4 years now, and really no day or week is the same, but really that's not any truer than the last several months. I mean, our team, as Jared had mentioned, has really switched from what they had been doing 80% to really 80% of what they're doing right now is really diving into how we help with business within tariffs. And that's really why we exist. We're here to help businesses. Here to help you navigate it. We're here to really cut through the noise and give you the updates that you need without having to sit through the headlines and in the middle of trying to run your business and planning ahead. So we have these weekly briefings. We have our tariff dashboard. Please stay in touch if you have any questions along the way. If you missed any part of today's conversation or even missed one of our live sessions, just you can see the full series and then join that week's and catch up on our YouTube series. Just go to our website and find that information. But if you have any follow-up questions, feel free to reach out to us by email. Rams can drop that into our chat. And then if you're interested in more of our events, and visit our website, sign up for our newsletter, and just follow us on social media. As the marketing person, I'm going to have to do that shameless pitch, but follow us, keep in touch with us, and then just know that we have a regular lineup of programs throughout the year, and we'd love to see you at any of the upcoming ones, but stay in touch. Thank you.